Welcome to the 24 General Fund Budget and Tax Levy. First of all, let's go into your 2024 tax levy. Now remember, before setting the actual levy, the City Council must estimate the expected city expenditures for the next calendar year. This is done through the preparation of the city budget, which begins in June of each year and continues until the final budget is approved in December. With the city budget, we always start at a zero base. So what that means is we determine the actual needs for the year, and a lot of it is based on trend. With our personnel budget, this is developed based on each individual staff pay, as well as the benefits provided and the cost to provide those benefits. Our personnel committee will also review this. Our professional service budget is developed based on the professional service contracts that are in place, example like our audit, our legal, counsel, planning, engineering, and other consultants, where our operating budget then is based on all other costs associated with operating the city and providing the services. Such as bank fees, utilities, operating supplies, and then transfers to other funds is based on our CIP fund. Once the budget has been completed and the impact on the levy has been determined, then it's sent out to each department. Each department then meets with the finance and the city administrator to review and to determine if any changes are needed. Finance, along with the city administrator, will be meets then with the finance committee before the proposed budget is considered during budget workshops. Then during the budget workshops, the full council can then make any recommendation to the preliminary budget prior to setting the preliminary levy, which was done in September. The council then continues to make recommendations to the preliminary budget prior to the final adoption in December. So now that we've determined the estimated cost for the year and we take into consideration all anticipated non-property tax revenues, so this includes various state aids or grants, the city will subtract those anticipated expenditures from the projected revenues, which results in a substantial amount of money that the city will need to raise through the property tax levy. For 24, the anticipated property tax levy, including the debt levy, the property tax abatement levies, and economic development levy, is $5.6 million, with the general fund budget at $6.7. So remember, the county assessor determines the market value, and the market value is how much the property would be worth on the open market. And this is done by January 2nd, before the taxes are even payable. The state also dictates that all market values must be between 90 and 105% of actual sales. So the information used to determine the market value would include new construction, improvements to existing properties, and sales of properties from October of 21 to September of 22. For 2024, the property values for Sherburne County, the total valuation increased about 8.92%, where the city's, the net tax capacity, which is the taxable market value of all properties, increased by 10%, of which 2% is new construction. Now let's look at how property taxes are determined. So the legislation can frequently change the classification system, which can shift property tax burdens from one type of property to another. The taxable market value times that class rate determines each individual's parcel tax capacity. The tax capacity of a parcel is what dictates the amount of taxes that will be applied to that parcel based on the needs of the government entities. So for the city, the school, and the county. As stated earlier, homestead residents are taxed at 1% of the taxable market value. In addition, as the property values increase, that homestead credit will decrease. So in this specific example, The taxable market value of this property for 24 is $284,000. We would take that 284 times its class rate, which this is a residential homestead, which is 1%. Their parcel's tax capacity is 2,842. That 2,842 is what's multiplied by the city's tax rate, the Sherburne County's tax rate, and the school's tax rate. And that gives the overall total property taxes. But for this example, we're only looking at the city's portion. So with the preliminary city tax rate of a 37.52, this particular parcel would be paying $1,066 in city taxes only. So now the city's taxable market value, which is an estimate of the market value of all properties within the city limits, has increased 153% since 2015 to $1.4 billion. Now remember, when taxable market values increase, then the city's tax capacity increase, which this has an overall effect on the city's tax rate. You'll see that in 2022 to 2023, there was a substantial increase. That's where nationwide we saw those 23, 24, 25% property tax increases everywhere. That's what the substantial rate increase is. If we look at our city net tax capacity value, and remember, this is what's used to calculate the city's tax rate. This, since 2015 alone, the city's net tax capacity has increased 128%. Now, just a reminder, it's the county assessor who determines the market value for each parcel, and that's determined by January 2nd of the year before taxes are payable. So for 24, those market values would have been determined by January of 23. In addition, each parcel is assigned that class rate based on the use of the property as determined by legislation. The legislature can change the classification system, which that can shift the property tax burden from one type of property, so commercial, apartments, agriculture, residential, to another. So currently, residential is taxed at 1% and commercial is taxed at 2%. The city's net tax capacity is used to calculate the city's tax rate. As taxable market values increase, the net tax capacity increases. So for 24, the tax capacity is increased by 10%, with about 2% being new construction. Now remember, with new growth, that's what helps lower the tax burden to existing properties. So if we look at our 24 proposed tax levy, let's look at the components. They're similar as year over year. So the general levy, which is at about 4.5, this shows an increase of $424,000 and represents 81% of the total tax levy. This levy are the revenues needed to balance the general fund budget. The general fund budget are the expenditures associated with providing the services to the community. The property tax abatement levy at $57,000, this represents the property taxes that are paid by the property owner, and then the city in turn pays the property owner a portion of those taxes back. Currently this year, this represents about 1% of the total tax levy. These abatements are for Luperland and Premier Marina projects. The debt levy at $877,000 is used to pay the yearly debt payments for the city and represents 16% of the total tax levy. Now remember, the city cannot pay off debt or pay down debt any sooner than what's outlined in the bond documents. However, the city can use excess cash to make yearly debt payments in lieu of increasing the debt service levy. The Big Lake Economic Development Levy, these are the funds used for promoting economic development within the city. This levy is $130,000 and represents 2% of the total levy. So with the proposed tax levy, and this includes your general, special, and debt levy, is at 5.477. And this is an increase of $260,831 or 4.88% over 2023. The proposed tax levy for the Big Lake Economic Development Authority, or BLEDA, is $130,000, and this is the same as 2023. The total tax levy for the city is $5.6 million, and the city's tax rate is 37.52, which is a decrease of 1.99. So the total levy for the city has increased on average about 3.5% per year from 2010 through 2024. As you can see, the general fund levy, that's the blue bar, these are the funds, remember, that are used to provide the services to the taxpayers, has increased since 2010. This increase is a reflection of the population increase of about 17% since 2012, and the inflationary increase is about 29% since 2015. The debt service levy has decreased since 2015, which reflects the decrease in outstanding debt for the city. Now, let's look at the city levy percent change from the year 2008 through 2024. So the levy increases reflect the increase of the levy over the years, which represents the increased cost to provide services, and it could also indicate the increase in the debt levy payments for those years. But as you can see, staff and council, we do try to be very conscious of what kind of impact this has on our taxpayers. And so the city levy percentage has been very, very modest. Now remember, local governments do not directly set the tax levy, but instead the tax rate, local governments do not directly set the tax rate, but instead the tax rate is a function of the levy and the local tax base. The city's tax rate is calculated based on the total levy amount, so these are the funds needed to cover those city services, divided by the city's net tax capacity for that year. So for 2024, even though the total levy increased by $260,000, the city's tax rate will decrease. And as you can see, from 2014, we have slowly been decreasing the city tax rate. This is also an indication of new growth as well as market value increases. So with this, the preliminary total property values, they show an increase about 14%, with about 2 of it being new construction again. So with the city's tax rate at 37.52, and the estimated 6% increase in homes, residential home values, the typical homeowner whose home, say in 2023 was $375,000, now would be worth $397,000. They're going to see an increase of about $1.50 per month for city's portion only. Now, if the city's net tax capacity had not increased by that 10%, there'd be about a $3 to $8 increase, or about 4% for the year, as the city tax rate would increase because our overall levy funds, the funds we needed to provide the services, have increased. So looking at a residential property with a value of $318,000, the estimated city's portion of the property tax would be approximately $1,161 for the year, or around $1.30 more than the prior year. This is only if the property value increased by 6%, which is the average increase projected for residential property values. Now, if the property value did not increase, there would be a decrease to the city's portion of the taxes because the city's tax rate went down. Remember, the homestead exclusion goes down as property values go up. If we look at all jurisdictions, then this property would see an increase of approximately $9 per month. Just a reminder, the homestead exclusion caps at a deduction of $30,400, at a 9% exclusion rate, so the property value minus $76,000, and that amount is deducted from that cap of $30,400. And that exclusion for this year for the home values less than $413,000. So if your home is valued more than $413,778, you do not receive any market value exclusion or that homestead credit. However, in 2025, the deduction cap will increase to $38,000 and the home value will increase to $517,000. So more property owners will actually receive a portion of market value exclusion. So when reviewing the allocation for the property taxes based on jurisdiction, it is fairly consistent year over year. So 30% or 30 cents of every dollar goes to the city, 30% or 30 cents of every dollar goes to the county, and about 40 cents of every dollar goes to the school. Before we move on to the city budget, let's recap the city's proposed levy. The total levy is proposed at $5.6 million with a city tax rate at 37.52. So if we compare ourselves to other cities in Sherburne County, the city's tax rate is one of the lowest. The city's growth is in line with what Sherburne County is experiencing. If we look at our tax capacity comparison, we increased that 10.43%. However, if you look at like Elk River, they increased 12%, but Elk River has a lot of commercial and industrial business, which are taxed at a higher rate at 2% compared to 1% for residential homes. Currently, the city's market values are comprised of 87% residential and the remaining 13% apartments, commercial, and industry. So remember, as new development occurs, that tax base will grow in the city and the city's tax rate will continue to go down, but it also helps our existing property owners because there's more people who are sharing a slice of the pie. So now let's move on to our budget. So for 2024, the city's budget is at $6.7 million. This is a 7.68% increase, and our revenues balance our expenditures, so we have a balanced budget. The majority of the increase in revenues are in taxes as the preliminary levy is higher. Also in other revenues, the preliminary indicates an increase in license and permits as well as intergovernmental investment earnings and a slight increase in franchise fees, which represents the new construction. The majority of the increase in expenditures for each department is in personnel. There's also a slight increase in transfers to other funds. When we're reviewing the preliminary revenues, you will see that 65% of all revenues needed to balance the budget are from the collection of property taxes, with 7% from franchise fees. The franchise fees that are collected are transferred to the city's CIP funds. The 7% or the $450,000 transfer from the liquor store, this transfer lowers the overall funds needed to be raised from property taxes in order to balance the budget. Is a great reason as to why it's important to shop local, as the profits from the liquor store are poured back into the community through this transfer to the general fund and assist in paying for the services provided to the community. When reviewing the preliminary general fund expenditures, you will see 64% of all expense are allocated to personnel. This is expected because considering the main objective of the city is to provide services for those in the city. 25% of the budget is for operational cost. 7% reflects the transfer to the CIP funds for future projects, and 2% is for professional services. Personnel for the general fund is showing an increase of $333,000 or 8.42%. The majority of the increase is contributed to the overall increase to the city's pay plan as well as other insurance. 2024 is an election year, which there's a $25,000 increase to the overall budget. This is just the cost to even operate these elections. Transfer to other funds is showing an increase of $7,000. This increase is contributed to a slight increase to the computer replacement fund. The 2024 proposed budget also includes increase in utility costs as well as inflationary costs for products and services. When we review the general fund proposed budget expenditures by service, you'll see 48% of all expenditures are allocated to public safety. This includes our police, our fire, and building, and it's one of the reasons why Big Lake is such a safe and great community. 15% is allocated to the Public Works Department, which maintains the infrastructure of the city, so your streets and your buildings, as well as your parks. 13% is allocated to culture, which includes the park department, library and recreation and communication department. These services promote the quality of life we have in Big Lake. As shown with this chart, the allocation for 2024 general fund budget are consistent with prior years. Public safety, the red portion of the bar chart, which is very important to the community, is normally around that 48% of the total budget. We did not start budgeting transfers until 2017. As indicated earlier, the majority of all increases to each department was contributed to the increase to the city's pay plan, state mandated sick and safe pay, as well as insurance and premium increases. So for the general government, there's has an increase of 2.73%, and they represent about 19% of the total budget. Election shows an increase, again, because 2024 is an election year. Public safety has an increase of 8.12, and they represent 48% of the total budget. Streets and parks have an increase of streets and highway have an increase of 9.42%. Culture and recreation has an increase of 9.16. Economic development has an increase of 4.74. So for just a main recap, the general fund budget expenditure is $483,000 over our 2023 at $6.7 million. Personnel's expenditure has an increase of $333,000. This is a 3% increase to our market rate increase to our pay scale. Step increases to employees with a positive performance review. The state mandated leave time. So for the earned sick and safe leave, which is new for part-time seasonal, that's about a $3,686 increase to the budget. There will be a paid family medical leave here in Minnesota. This is a payroll tax that begins in 1/1 of 26. We don't know for sure when the city will have to maybe front load some of this. So we did budget the city's portion beginning in 2024. This, like I said, is a payroll tax. It was budgeted at 0.35% of the wages. This is a $10,000 increase to the budget. In 2023, council did authorize a 15 police officer position, and then in 2024, an additional police officer position. However, the one in 2023 was after the budget was approved, so it wasn't in the budgeted numbers. So that's an increase for 2 additional police officer position. If they are filled, we would have 16 officers, and it's around a $225,000 increase. Wages and fringe. Advanced resignation program, 22% of our staff are near retirement age. We're seeding this program with a $7,500 budget. It'll be set aside in designated fund balance, as well as there's an increase in insurance and premiums because, as like everybody, we all aged. Operational expenses increased to $116, and this is just the cost of fuel, supplies, training, utilities, and liability insurance. And then again, as stated earlier, elections are in 2024, and this is an increase to the budget. Just a reminder that the debt levy is used to pay the debt principal and interest payments due in 2024. So for 2024, the debt service payments are $2.3 million, of which 39% is covered by the debt levy of $877. Now remember, the debt service funds are not used for any water or sewer debt. These debts are associated with street projects, the industrial park, the police and library building. With our CIP plan for 2024 through 2028, the city looks at all needs, including the enterprise fund and debt payments that are due each year when planning what expenditures will actually be approved for each operating budget. If we look at our capital improvement plan for 2024 through 2028, again, it's indicating the LGA funds will be used for the capital improvement items. However, we do not receive payment until July, and then the remaining 50% again in December. And that's why any items over $50,000, we try not to purchase until December. So in the event the state holds back the allocation, there would not be a shortfall in these funds. Just looking at the local government aid allocation and projects for 2023 through 2030, again, staff continues to plan for the future in a very conservative method. For 2024, the LGA is projected to the amount that we're projected to receive is $877,000 and has been allocated to projects and equipment. 2024 LGA is an increase of $85,000 from the funds received in 2023. In the CIP, there are some very exciting plans for the Parks and Trail Department, so please stay tuned. And final recap. So our total preliminary levy is setting at $5.6 million. It's an increase of 4.88% over 2023. Our city tax rate is at 37.52, a decrease of 1.99. Our preliminary general fund budget is at $6.7 million. This is an increase of $483,000. And the cost per day to provide city service based on population estimate of 12,492 is $1.49. Remember, taxes do help maintain our quality of life. For a property owner whose home value is $318,000, for just $1.38 per day, your property taxes help provide the safety of our community. For just 53 cents per day, it helps maintain our wonderful parks. And for 43 cents a day, our great crew keeps the streets in order. With that, if you need additional information relating to your property values, please contact Sherburne County's Assessor's Office at 763-765-4900. If you need help relating to your overall tax statement, please contact Sherburne County's Auditor Treasurer at 763-765-4351. Or if you have any questions relating to the city taxes or city budgets, please contact myself. My direct line is 763-251-2974. And remember, we do have our public input meeting on Monday, November 27th at 6 o'clock. Thank you.